Hey, hello, Jack Tubbs of the J Team, Realty One in Surprise, Arizona, coming to you on this just absolutely fantastic, beautiful, perfect day that we are experiencing here in the Valley in Phoenix, Arizona. Hey, you know what? I've been talking to you guys a lot about what's going on in the market. I've also given you probably 3 installments right now of why we don't have to worry about the real estate bubble bursting while the market's going to crash, while we're going to have a foreclosure issue across the country because just so many different factors and indicators show that it's not going to happen. But one of the things that I wanted to share with you about what most people look at as far as being the buyer of a home, purchasing real estate. Why do they do it? What do they think about it? And the one aspect that I really want to focus on today is that how many people feel that real estate is still a good investment? How many people out there feel that purchasing real estate is a better investment than the stock market? Well, according to the survey of consumer finances by the Federal Reserve Board, 93% of Americans feel that purchasing real estate is a better investment than the stock market. Now, the question you're going to ask yourself, and I asked myself too, as I read this, why would they think that way? Well, I got to look at some of the current events that are going on in the news and some of the things that the Biden presidency says that they want to do, that they want to try and put forth. And the one thing that really kind of drives this whole narrative of why real estate would be a better investment than the stock market is the possibility of doubling the capital gains tax. And why is this going to be a big deal? Why would this drive the market down? Well, it's like this. We work for our money, we pay our taxes into it, we invest, we watch it grow in the investments that we have bought into, and as it grows, then we pay capital gains taxes on that investment. But now, as opposed to paying a smaller, or maybe even want to look at it as a more nominal rate of capital gains taxes on our investments as they grow, and reason we're doing this is so that we have something to fall back on in our retirement, to finance our retirement, or to finance our children's schooling so that there's no student loan debt, or whatever reason we're doing it for. We're doing it to make sure that we can divert some future costs away from out of our regular income, that we have some an additional income to help pay for those additional costs when they come. We're trying to be responsible here, but as opposed to paying, say, a more nominal rate of capital gains, we're going to see it double, whereas we're going to pay almost the same amount on the gains that we've invested on money that we already paid taxes on. We're going to pay almost the same, if not more, taxes that we paid prior to when we invested our money. Why is that going to change the market? Well, you know what? A lot of people are going to be looking at their investments and they're going to say, you know what? As opposed to paying double in capital gains taxes, why would I wait the 3 to 6 months or however long it's going to take to get the capital gains tax doubled? Why wouldn't I sell now, pay my cap gains at a much lower rate, and put it in the bank or some steady, some very liquid asset? Maybe I'll buy gold with it, or maybe I'll do something, I'll put it someplace else where it's not going to show the appreciation and I won't have to pay cap gains taxes on it, at a higher rate. And what's that going to do? That usually when we have these kinds of sell-offs because of this kind of situation, we see the market drop down because people decide that they're going to pay less taxes. Let's take our gains now, pay the taxes now, and find more something that's more liquid, such as just putting in the bank, maybe buying gold or some other investment that doesn't typically show the same kind of appreciation that stocks and bonds, and isn't tracked as much as stocks and bonds are. So this could lead, I'm not saying it will, but it could lead to a market sell-off. So when people put that in mind, they think that 93% of the people out there see real estate as being a better investment than the stock market. And here's a little breakdown that they found in this study that they did by the consumer survey by the Federal Reserve. And this is what it basically looked like right here. You can see that the people that felt that real estate is definitely a better investment, and you can see the people that say that it's probably a better investment, And you can see the 6.7% of people that felt that stocks were still a better investment. And I can understand why that thinking is still there, because we have seen great growth in the market over the past, say, I don't know, close to 10 years. And that would be driving me to think the same way. But if this cap gains tax goes up, it could halt that and it could drive the market down. So a lot of people are feeling that, hey, definitely we want to think more about, you know what, maybe investing in real estate, something that's a little more steady. It may not see the great gains, though we've seen great gains. You know, here in the Valley in Phoenix, we've seen month over month over month of gains, and year almost 20% growth over year. So it's been a great, solid investment. Will that slow down? Well, it depends on what the economy does. If we have this great sell-off in the stock market, that might slow the economy down enough to slow the sales down, and we'll see prices ease off. And if it gets really bad, then yeah, we'll see some relaxing the prices. But once again, we see all the industry moving into the valley. I don't see that as being see the easing of prices being a reality, but we see maybe a straight line as opposed to the climb that we've seen. We'll see prices straight line out. Now, why do people feel that real estate is a better investment than stocks? Well, housing prices, they say, are less volatile. Well, that's not true right now here in the valley. We see that they can be very volatile, going up but not coming down. It provides more stability for family, provide living environment. It also gives us tax relief in certain aspects. It definitely saves some rents because we're building equity as opposed to paying a landlord's equity. It gives us something that we can leverage for future costs, such as college for kids, and sometimes even if we want to do like a reverse mortgage, it can be used towards retirement savings. Housing's higher returns have obviously been higher, and it's one of those things where we're committed to. It doesn't give us that freedom. It's one of those devices that we're committed to, that we work towards, that we build our equity into, we build as an investment. And it locks in our housing costs, because once we've got a mortgage payment, we know what to expect month in and month out until that mortgage is paid off. The only thing that can be sort of a variable are going to be insurance and taxes. And as it's been, as of late, depending on where you live, we've seen that property taxes and insurance haven't made huge gains or huge jumps as far as what our costs are. So these are some of the reasons that people are looking at and seeing that real estate is probably a better investment, or definitely a better investment than the stock market right now. And I also gave you one of the reasons why they're thinking that way, and that's the proposed increase by the Biden administration in doubling the capital gains tax, which could definitely run the market into a few challenges, if not maybe even a sell-off all by itself. But hey, if you have any more questions, if I can help you buy, if I can help you sell, if I can help refer you to a loan officer to help you understand the options that are open to you, what your buying power is. As I reported last week, we've seen a small drop in mortgage rates, which means that we're getting back to close to having those historic lows, which means your buying power is huge. Sellers, that means that prices are going to continue to increase. And if you're ready to cash out some of those savings and maybe move into an upgrade home, or maybe it's time for you to make that downgrade and get into a smaller home because you're getting closer to retirement age. Hey, let me help you with that. You can get a hold of me direct at 248-330-7972. That's 248-330-7972. Or you can email me, Jack at thejteam.house. That's JACK at THE, the letter J, the word team.house. Or you can call the office, talk to any of my team members at 623-252-4061. That's 623-252-4061. Hey, this is Jack Tubbs with the J Team, wishing you a fantastic Monday. Get out there and enjoy this weather. If you can get out on the golf course like the people out behind me, I suggest that you do it. Other than that, you have an awesome day, and I'll be back with you tomorrow with more about what's going on in the Phoenix real estate market.